You're watching Kitco News, where our next guest joins us from Vancouver. He's the editor of Resource Opportunities, Lawrence Roulston. Lawrence just came back from visiting 9 countries on 4 continents in less than a month, so he definitely has a global view of the economy. Lawrence, thanks for joining us. What would you say is the general sentiment towards the economy and metals?
There are very, very different outlooks on the economy in different parts of the world. Obviously, in the West, people are still very negative. They're very concerned about going back into a recession. Gold is very popular right now because people are buying gold as a hedge against uncertainty. In Asia, it's totally different world where the economies are booming and investors are taking a much more positive long-term view of the economies there and the economies worldwide. And from the metals market's perspective, it's very, very important to understand what's happening in Asia, because developing countries, as China, India, for example, are using a great deal more metal than a mature economy for the same level of economic activity. And that's reflected in the copper price, for example, which is at or near its all-time record high. So very different outlook here. And I think North American investors are really missing some important investment opportunities by being so focused on the negative aspects of the Western economies.
Lawrence, you mentioned that China and India are not so much focused on gold as an investment, but rather for jewelry. Are they not deterred by the high prices?
It's important to bear in mind that the high price of gold measured in US dollar terms is not necessarily the same as priced in currencies of other nations. The dollar has declined considerably against many currencies. So gold is not as expensive in other parts of the world as it might appear just looking at the US dollar terms. Certainly the price has gone up pretty much everywhere. But in India, for example, it's still fundamental to their culture, the gold jewelry. And China, with the rapidly rising wealthy middle class, gold jewelry is becoming more and more important, where China is now rivaling India as a market for gold jewelry.
Lawrence, you started your travels in South America and you ended up in Asia. Which countries do you think we should be paying attention to for mining and metals?
Well, the most important aspect is Asia, because of the consumption of metals. As I mentioned, the copper price is near its all-time record high because of very strong demand coming from Asia. And we're not seeing that in North America. Investors over here still look toward, we might go into recession and there might be a double dip and therefore we don't need base metals. In Asia, the concern is more, where will we find enough supply of metals to keep the economies moving forward? And so the big names in the base metal markets have already seen big rises in line with the rises in the price of the underlying commodities. But the smaller companies, especially the companies with more of a North American investor focus, in general have seen very little reaction in their share prices. And I'm seeing in Asia, the mining industry over there are clamoring to get their hands on new sources of supply. So the little North American exploration development companies that hold world-class metal deposits are coming more and more under the view of these Asian mining companies, and we're going to see a wave of takeovers. And it's going to be a real shame if the takeovers take place at anywhere near the kind of prices that they're trading at now.
And finally, Lawrence, you're a speaker at this week's New Orleans Investment Conference. What will you be telling attendees? What's your sentiment on gold?
The gold price traditionally over the last decade has moved in kind of fits and starts. We've seen a very big rally in the gold price over the last few months, and over the last decade, every time it's had a big move upward, it's consolidated, pulled back a little bit, and before moving to its next level. Longer term, I'm still very bullish on the gold price and the gold market. I think investors, for a number of reasons, should have considerable exposure to the gold market in some form and should maintain that going forward. But I would urge a little bit of caution at this point with regard to the bullion price, just because it does have this habit of pulling back and consolidating a bit after it's had a big run.
Great, Lawrence. We look forward to seeing you in New Orleans, where the Kitco News team will be on hand providing full coverage. Thanks for joining us, and thanks for watching. This is Daniela Cambone for Kitco News.